Be reviewing some single tenant net lease assets, as well as going over some of the things you should look at when you're trying to choose one for your investment portfolio. Hey guys, my name is Matthew, or Commercial Deal Junkie. I'm a commercial real estate investor and broker based out of Southern California, and I buy commercial property all around the country. So single tenant net lease, for those that know what it is a building with a single tenant in it that pays base rent as well as all expenses. So I have some examples pulled up here that I'm actually going to go and rate and review and talk about why I think they're a good option or why I don't think they're a good option. Now, I just pulled these up. I'm going to be going over them and just going over my thought process. What are the thoughts that go through my head on why I think a asset is good or not for a investment? Now, there's a couple things you want to keep in mind when you're looking at these. The first one is, what is the strength of the tenant? So not just, oh, is Arby's a good brand, but what is the franchisee that's behind this Arby's location? That's the first thing I'm looking at. Second thing is obviously the cap rate. What kind of return am I going to get on this asset? And does the cap rate reflect the risk and the return I want to see in an asset? Next is retenantability. This is one that very few single tenant net lease investors, STNL investors, very few of them that they look at is how easy can I re-tenant the building if this Arby's were to leave. Now, we're just picking on this Arby's because that's the first example I'm going to go over here. Next is, what are the lease terms? That means, what are the remaining terms left on the lease? How many years left? What kind of increases? And what can I expect for the future of this lease during my ownership? So those are just a few of the things that I go over. You know, your parking, obviously lot size, building age. There's a lot of things to consider when you're looking at these assets. So I'm going to go over a couple examples, go through my thought process while I look at these, and I'm actually going to score each one of these at the end of the day. And I'm going to score three things on each property. I'm going to score the property itself, I'm going to score the location, and I'm going to score the lease. Now, all of these have a bunch of small criteria that fall under it. Like, for example, scoring the location is not just scoring the major city that it's in, but also scoring that exact street, whether or not it's on an intersection, how much traffic the street gets. So each one of these ratings, there's a bunch of minor and miniature criteria that fall into it. Okay? So let's start with this Arby's. No, you're not gonna let me exit out of this photo? Of course you're not. I mean, why would you? Why would you? Okay. So we have an Arby's in Wilson, North Carolina. You know, it's hilarious. I actually worked with this guy right here at Matthews, great broker. So Arby's, it's listed at a 6.75 cap in Wilson, North Carolina, 2,816 square feet. It is shadow anchored by a Walmart. Shadow anchor just means that the anchor is behind it and traffic's coming from that Walmart as well as the street here. Now, where is Wilson? I don't know why it won't let me exit out of these photos. Where is Wilson, North Carolina? I see. So it's sort of like it's a smaller city in North Carolina. I like that it's near Raleigh, which is one of the fastest growing markets in the country. I'm a big fan of that. What's nice about LoopNet here too is I can look at traffic. Now, if LoopNet didn't have traffic, I could go to the Department of Transportation and find it, but LoopNet makes it easy for us. 23,000 vehicles a day, which isn't bad. It's not phenomenal, but it's not bad either. I also like that it's shadow anchored. It's not just standing alone on the street. Let's see here. 6.75 cap, 40 parking spaces, 1993 build. That's not too old. It's not new, but it's not too old either. So I'd probably want to know some more information about the guarantor, but so far this isn't looking like an awful deal. So here it says year built 2017. Here it says year built 1993. So I want to see which one's true. They may have just renovated it in 2017. But so it looks like long-term operating history. It's been there since 1993. Absolute triple net. So that means the landlord has no responsibilities. Tenant's going to pay insurance directly, property taxes directly. They're going to handle the landscaping out here. They're going to make sure the parking lot's in good order. They are responsible for everything. That's what absolute triple net means. And then there is an attractive rent increase. It looks like they're not giving us a number. We'd probably have to reach out and get some more information to figure out what exactly. Located, yeah, I mean, brokers tend to exaggerate the amount of traffic. Here they say 54,000, but it sounds like they're combining this traffic with this traffic. And let's be honest, it only really benefits from this traffic. So in reality, it's about 23,000, which isn't awful. It's not great, but it's not awful either. So overall, I mean, the property's not bad. Let's assume I mean, it's not a 2017 build because the tenant's been there since 1993. So it can't even, I mean, so I'm gonna assume it's a 1993 build. What's good is it has the standard layout for single tenant net lease quick service restaurants. So you could simply plug and play this build. It's not built specifically for the tenant, which is good. So you could replace that with a Burger King or whatever, and it probably wouldn't be a massive build out. So that means I know it's going to be it could be re-tenanted easy. So as far as the property, I'm going to give it a B because it's a little bit older, 1993. Um, the building doesn't seem to be in bad shape at all. Parking's okay. It's not phenomenal, but it's not lacking either. But yeah, I'm gonna give the building a B. Location, I like that it's in North Carolina. I like that it's near one of the fastest growing markets in the country, Raleigh. But I'm gonna give it a B because it's not a major metro. You know, if this was in Raleigh, it would get an A. If this was in one of the major markets, I'd give it an A. But and it's also the street it's on has 28,000 vehicles, which, like I said, is good, but it's not phenomenal. So I'm going to give the location also a B. Next is the lease. Now, I don't yet have enough information to feel confident about giving the lease a rating. I see that it's an absolute triple net, which is a big positive. It's not a double net, means the landlord has some responsibilities, or a just a triple net, which means the landlord still might be responsible for the structure, things like that. Absolute triple net means zero landlord responsibilities, which they literally say here, zero landlord responsibilities. But I just don't have enough information to give this a rating. So I'm going to give the deal an overall B. We had a B in property, quality of the building and the property itself, a B in location, kind of a question mark on the lease, but things were trending in the right direction. Another thing I would have wanted to see with the lease is I want to see the rent increases. I want to make sure they're going to at least match inflation. Some of these single tenant net leases, they try to get away with just 1%, 2% annual rent increases, which typically won't match inflation. So in a 5, 7, 10-year period, you're likely going to be lagging behind inflation. So I'm gonna give this deal an overall B, not a horrible deal. If you really believe in Wilson, North Carolina, maybe you know of some huge development that's coming nearby. Maybe another big tenant bought this piece of land right there, and you know they're going to build. If you have some additional information about this, maybe it's one of the top performing Walmarts in the area. So it's definitely need to collect some more information, and you'll realize this as I go through all of them. This is more of like a surface level look. If I was really deciding whether or not I wanted to purchase property, I would do a whole deeper level of analysis that would involve, what kind of developments are coming in the area, how strong is this Walmart, how many years are left on that Walmart lease, and I'd want to be confident that this is a growing neighborhood. It would, population increase in all those points in order to feel really comfortable about the deal. So that's this Arby's deal. All right, let's move on. Next, we have the Human Bean, which is a coffee shop trading at a 6 cap. I did like the previous deal was a 6.75. That's not bad for um, but I had no idea how many years were left on the lease. There was a lot of missing information there. All right, let's look at this, the Human Bean. So personally, I've never heard of this brand, but let's dive into it a bit more and see if they warrant a 6 cap and if this is a decent deal. There's 12 years remaining on the lease, so you have a decent amount of term left. Once you get under 10, the cap rate starts increasing. It's considered a riskier deal. Once you get under that 10 mark, especially you get under 5, you have annual rent increases. You got the drive-through. It's a growing brand. They're saying it's experienced franchise operator. I'd want to learn more about that. What do they mean by that? Several locations. They say strong demographics, but again, brokers, their job is to sell the deal. So take everything they say with a grain of salt. Absolute triple net, so zero landlord responsibilities again. It says it's a hard corner. That's intersection, so that's great. That means it likely benefits from the traffic of 2 streets. So let's look at this here. So this one's interesting because usually LoopNet's pretty good about giving traffic counts, but it looks like it doesn't have too many details here about the traffic counts. So but it does look like to be a hard intersection there. Let's plug this into Google. I want to see what this hard corner looks like. Is that the right place? It is in, yep. So look, see, it was built very recently in September 2022. They were still building this thing. Yeah, they say it's a hard corner, but not really. This is the corner they're talking about here. Now, that could just mean it's a big lot. A hard corner doesn't always mean like, you're getting all that traffic. But see, like I don't expect a road like this to be getting a whole bunch of traffic. So this hard corner doesn't really tell me much. Not really that big of a plus. Um, So the building was built in 2023, which is huge. That's great. You have 3% annual rent increases, also big. So you know it's gonna likely match inflation. 3% is probably as good as it gets for the single tenant net lease space. And then a Human Being supports 260 locations open or under development in 25 states. So even though I've never heard of the Human Being, it looks like it's a growing brand. But it is selling at a pretty tight cap rate of 6%. Um, okay, let's see here. Let's scroll through this. Like I said, I've never looked deep dove these. I just selected them, and I'm going through them with you guys just to get an idea. Do you have NOI is 107,000. Now this NOI is pretty much what you should be able to put in your pocket, other than your mortgage. If you have a mortgage, you'll obviously put some of that away. 0.71 acres, not a massive lot, but not a small one either. Absolute triple net, 3% rent increases, 1 5-year option. I'd wish there were more, but as long as they're doing well, they'll even if they're out of options, they'll keep renewing. Rents commitment, so 3% increases, and then they're paying about 9 grand a month. So you have some brands on this street, nothing major though. Nothing major at all. You have Dollar General, McDonald's, Advance Auto, Walgreens, kind of like those brands you see in every single neighborhood in the country, no matter what. All right, so property. Now this is a brand new build. It's beautifully built. It has the plug and play style of build, so you can kind of throw any other brand in here and do just fine. 2023. It's got the drive through. So as far as the actual property, I'm gonna give it an A. It's a beautiful property, and I think if this tenant did leave, you probably wouldn't have too much issues retenanting it just based off the property. Now we go into location. So location, the traffic. Did we check the traffic? Oh, the traffic, we actually couldn't see too much, but if we go up the road here, there's only 5,000 vehicles up here. I'm assuming you get more vehicles picked up here at this intersection. So I assume this is going to be more than that 5,000. But even if we double it and say 10,000, you're still not getting that much traffic. So I'd probably give this a C when it comes to the location of the asset. It's also in a fairly small market. It looks like it's right outside of Baltimore. Yeah, actually, it could have decent population, but I'd want to know how many people are in a 1 mile radius here. It's not surrounded by any major retailers either. Like I'd want to see a Home Depot or a Walmart or a Lowe's or a Kroger, whatever nearby, or even better on the same road. So I'd probably give the location a C. The lease, I mean, we got 12 years left on the lease. We got 3% rent increases. We got a 6% cap rate. So I'd probably give the lease a B. Mostly because I'd want a higher cap rate if just based on the location and the strength of the brand. It's not a weak brand, but also we don't know whether or not this brand is a fad. They only have 200 locations, which like isn't awful, but it's no Starbucks. So normally you would expect to see Starbucks and things like this at a 6 cap, but they're a rapidly growing brand, and there's risks that come with that, not just opportunities. So I'm gonna give the lease a B because I want a higher cap rate. Now you can offer a higher cap rate. They're offering, they're asking 1,795. So, but if you can get this at 1.5, for example, I'm making up a number, and this goes up to like almost a 7 cap, then yeah, the lease would be an A because then you're getting a 7 cap with 12 years left, 3% rent increases. So that would turn the lease into an A. So you can go ahead and offer a lower number and try to increase your odds. But again, if I'm not aware of like a Walmart that's going to be under construction here, the location doesn't really impress me too much. I do like that it's a new build, but overall, I'm going to give this deal a B minus. I wish, they had more going on in this location. This right here kind of is what turned the location down for me because there's no major retailers here. Like you have a Dollar General nearby, Royal Farms, I don't know what that is, Burger King, CVS. Like these aren't um, major attractions that are, experiencing millions of visitors a year that are really going to draw people to this street. So I'm going to give this deal overall a B minus. Okay. So that's the human being. It's a great name. Okay, let's move on to this Pizza Hut, and then I'm gonna pull up a different one. I'm gonna pull up like a pharmacy so that we can look at a different asset class. I just realized the three that I randomly selected all happen to be quick service restaurants. All right, so let's look at this Pizza Hut in Liverpool, Ohio, trading at a 7 cap. Now, this building is definitely an older style build. And we'll see the age of build right now. The parking lot, you can also tell that there's definitely some fading in the parking lot. So I want to make sure it's an absolute triple net. Let's see here. Long-term stable income by approximately 16 years remaining on the lease. I love that. Plus 6 5-year renewals. So see, you have 16 years left and you have a whole bunch of renewals for them to play with. 6 5 years, 30 years to renew after the 16 years expire. Strong franchisee, operator with scale, operated and guaranteed by SFR XI Holdings or Six Holdings, the 11th largest Pizza Hut franchisee in North America. Okay, so it looks like we have a strong franchisee here. It's an absolute triple net lease structure, no landlord responsibilities. So again, they're reiterating the brand strength. So let's see if they have an age of build on here. They don't, which I think is interesting. I mean, I can tell it's an older building. Now, how old, I don't know. Shame on you for blurring out the information. They probably want to collect all my data before they give me all their information. Look at the location here. It's kind of middle of nowhere, Ohio, right at the Ohio-Pennsylvania border. Let's see here, and let's look at traffic. Oh, they're not even showing traffic, which is surprising because St. Clair's Ave seems to be like the major thoroughfare here. It looks like thicker lines just mean, I'm guessing, multiple lanes. It's a wider street, so I'm assuming they'd get more traffic here. Let's plug this into Google and look at the street view. We want Ohio, East Liverpool, Ohio, East Liverpool. So here's the street. Let's see what kind of traffic we can see here. So this isn't actually a big street at all. Yeah, I'm not a fan of this location. This St. Clair Street is only one lane in each direction. Yeah, I'm not the biggest fan of this location at all, actually. Which I'm like assuming why it's a 7 cap is because the location's weak. Because you have all this term left. You have 16 plus years left on this lease. But I'm assuming they're selling it, well, there's many reasons they could sell it. Maybe the landlord just wants out, or it could be because of the location. So when it comes to the property, looking at this property here, you have an older parking lot that the tenant's eventually going to have to upgrade, but I'd make sure that's clear in the lease that the tenant is responsible for upgrading the parking. Lot size looks decent. Is there a drive-through? Doesn't look like there's a drive-through looking at this here. Yeah, because it doesn't wrap around the building. So we're looking at a no drive-through location, older build. I'm gonna give the building a C simply because of the lack of drive-through. It's a little bit older. It doesn't have that new modern plug-and-play look like the other deals we looked at did. So I'm gonna give the property a C. Now, when it comes to the location, it's kind of middle of nowhere, Ohio. I'm not familiar with East Liverpool, although Liverpool, Ohio kind of sounds familiar, but I'm not that familiar with the location. It's not on a main traffic road. It's actually right there. The building was built in 1981, but renovated in 2021. So that doesn't change my grade on the property at all. Old build. The location, I'm also going to give that a C. You have a weak trafficked road directly in front of it. It's kind of middle of nowhere, Ohio, so I'm going to give the location a C as well. And then when it comes to the lease, we have 16 plus year remaining on the lease. We have a whole bunch of renewal options. We have a strong guarantor. I'm going to give the lease an A. So it's a strong lease on a weak building in a weak location. So, overall, I'm going to give this deal like a C plus, maybe a B minus on the deal overall. Personally, I'm not the biggest fan in the world. Location is important. Retenanting this is not going to be easy. Once Pizza Hut leaves, you're going to struggle to find another national tenant that's going to come in and occupy the space. And then when you're buying it at 1.4 million, if Pizza Hut were to leave, although like they're a long ways from going, they'd have to file bankruptcy in order to leave. But let's say they went dark on this location, the operator decided to close this one down, might keep paying you rent, but they close the location down, you're going to lose money on this 1.4 million you invest. All right, so that's that. I do want to I want to look at a pharmacy because I feel like all the ones we've looked at have been quick service restaurants. So I'm going to randomly select this Walgreens here. Now, Walgreens is interesting. It is a struggling brand. They're closing down a lot of locations, so the cap rate actually trades at a higher cap because it's a struggling brand. They've been closing down a lot of those locations. But let's look at this. So you have a Walgreens in Virginia, Suffolk. I have not looked at this deal at all. I just opened it right now. 8.25 cap rate. That's actually a pretty strong cap rate in the single tenant net lease space. It's a top visited location with strong sales, top 16% of Walgreens nationwide. So that could be a good sign. That means if Walgreens is going to start closing locations, they're likely to close the bottom ranking locations first and keep the top ranking locations. Like if they start closing their bottom 10 stores, 20 stores, they'd have to go pretty far to start closing down their top 16 stores. Over 3,300 households in a 1 mile radius. Why they put this in here, I don't know, because that's actually really bad. I try not to buy retail buildings unless I can see a 10,000 people within a 1 mile radius. Excellent access and visibility, hard corner. We'll check that out right now. Immediately adjacent to a hospital. That's great. Virginia, Norfolk, Newport, 1.8 million in the MSA. All right, so a 2 acre lot. It's a big lot. Yeah, so it's a healthy sized piece of lot here. It looks like it actually is at a hard corner with a light and everything. Let's check the traffic of this corner here. Yeah, that's a lot of brokers that are working on selling this anyway. Yeah, so it's at a signalized hard corner. So that's great. That means you can truly include the traffic coming on both sides there because they both get access to the CVS. So you have 25, or sorry, the Walgreens. You have 25,000 vehicles on this road, 6,000 on this road, 31,000 combined traffic. Now, at the end of the day, I can't ignore that Walgreens is a weaker brand. I got to keep that in mind when I go ahead and I rate the lease. It's a good location. I wish they had more information on how many years were left on the lease because that would be pretty critical, especially with a tenant like Walgreens because tenants try not to close in the middle of their lease. Once a lease comes closer to expiration, that's when they start deciding whether or not they want to keep operating in that location. So I want to see several years left on the lease, but I'm not seeing that right now here. I'd have to reach out to one of the 100 brokers that are listed. That's CBRE for you. I'd have to reach out to one of these brokers to figure out how many years are left on the lease, what kind of increases they are. So they're missing a lot of the data. This building was built in 2007. That's not bad at all. Decent sized lot. Let's look at the neighborhood. It's not a small market, although it is kind of, tailed out here, but then this right here is a problem for me. Like it's not a densely populated area by any stretch of the imagination. We only have 3,400 people in a 1 mile. Well, that's households. Never mind. I usually like to see population, not necessarily just households. I want to know how many people. So, 3,400 households could be 7, 8, 10,000 people. So I take that back. That's actually not awful. Okay, so when it comes to rating the property, we have a 2007 build, which isn't bad. It's not necessarily old, but it's not new either. Another problem with these massive buildings here, 14,000 square feet, I believe, is that they're very difficult to re-tenant. If Walgreens were to leave, it's going to be difficult to find a replacement. There's already a CVS right there, which is direct competition. There's that medical office and that hospital they were talking about, but it's not going to be easy to find a tenant in here. You're probably going to have to try to find a gym that's going to come and take over this space. But so even though it's a newer build, it's big and it's single tenant. I'm gonna give that a B, maybe a B minus. On the building, you got to keep that in mind when you buy pharmacies. They're big boxes that you have to refill, usually with a single tenant, unless you're gonna spend a lot of money dividing this into a multi-tenant building. And sometimes you can't, just based off the way it's formatted, the length and width of the building. So I'm definitely going to give the property probably a B minus. Location, it's not a tiny market, being in the Norfolk MSA, but it is pretty branched out from this MSA here, so it's on the outskirts of the MSA. So I'm going to give the location a B minus as well. It is on a hard corner. That's the only thing that kept it from being a C. But I also don't like that there's a CVS directly across the street in the same plaza as the YMCA. And this does seem to be the major thoroughfare here. You have some bigger brands, some hotels here with the hospital. But I'm going to give the location a B minus overall. Lastly, we have the lease. Now, I don't have a lot of information on this lease. I don't know how many years are left. I don't know what the kind of rent increases they have. Walgreens and CVS, these pharmacies, in my experience, they tend to be pretty tight on the rent increases. But it is at an 8.25 cap, which is a pretty strong cap rate. But overall, I mean, I have to give the lease a question mark because I just don't know. You have one of the top Walgreens, which is great, but at the end, it's still Walgreens, which is a brand that's really been struggling and been in the news lately. So whether or not they're going to be around in 10 years, 20 years, I don't know. And then at some point, if you have to re-tenant this building, I just don't believe in the confidence to do so. It's going to take a lot of time or probably a lot of capex to really divide this space up and make it smaller spaces so it's easier to lease. But overall, I'm going to give this deal overall a C, which is pretty crazy to say that I'm giving a C. I'm giving the deal a C with an 8.25 cap rate. There's there's a lot of unknown variables that you can uncover, and it could possibly be a B after you collect all the details. But with the details that are in front of me, we have a struggling brand in a weaker population-wise MSA. You have competition right across the street here with the CVS that's in a better plaza. Unless you're aware of some kind of development coming around here, or maybe the Walgreens has a lot of term left. Maybe they've at least verbally committed to keep the location open. It could turn into a so I guess I'll give it a C plus at the end of the day. This deal here. The point is that there's a lot of things to consider when looking at these single tenant net lease spaces. It's not just what's the cap rate on the building. A lot of people over obsess on the cap rate when looking at these properties, and I'm not saying that's not important. It's definitely important, but there's a lot of other factors that come into play here, like the age of the building. How easy can I re-tenant it? What's the traffic? What does that market look like in general? And then they all kind of work together. You're not going to have a perfect property. You're not going to have a property that's in a grade A location, that's a beautiful brand new build on a really high cap rate with a lot of term left. That's not going to happen. So you got to decide what's important to you. Is it the predictability of a strong lease, or is it the comfortability of a good location and a good building that you're comfortable you can re-tenant? Is the property important to you that you're confident you could put another tenant in there? Do you really care about the location where you want it to be on Main and Main with a lot of traffic on each side? Different investors have different priorities, and depending on where your risk level is and what kind of returns you're looking for, you can go out there and decide what is the best single tenant net lease for you. So hope you guys enjoyed the video and really able to grab some information that you guys can use when shopping for your own deals. And if you guys have any questions or concerns or all of that, I have more ways to connect for me in the description. Like this video, subscribe, and I hope you guys are enjoying these so I can so I have some feedback to I know to continue doing these types of assets, these types of videos, or if you guys want me to talk about different kinds of assets, multi-tenant retail or industrial or that kind of thing. Anyway, I hope you guys enjoyed the video. Join my school community. We talk and we network and we go over deals together. It's completely free. You can find that in the description as well. So yeah, I really hope you guys were able to grab some value out of this, and I will catch you guys on the next video.